Ladies and gentlemen, let us introduce our first panel discussion on digital assets policies in the United States, sponsored by Vertalo. Let us welcome your moderator, former FDIC regulator, Vice President, Key Bridge Advisors, and now Mr. Jason Brett. Our panelists this morning are researcher, Adjunct Professor of Finance and Business Economics at USC, Nik Bhatia. General Partner, Castle Island Ventures, Nic Carter. Coin Center Director of Research, Peter van Valkenburgh. And Managing Director, Trammell Venture Partners, Christopher Calicott.
Morning, how y'all doing? I'm really excited about this panel about digital asset policies in the United States. We've already heard from one senator. We have two other senators we're going to hear from. My name is Jason Brett. I'm a former FDIC regulator. Have been working in the Bitcoin, cryptocurrency, and blockchain policy and regulatory space since about 2016. I want to have all my panelists introduce themselves and spend a minute or two telling about it, and we're going to get right into a lot of topics that we have to cover. So first, let's go to Peter.
Sure. My name is Peter van Valkenburgh. I'm the Director of Research at Coin Center. For those of you who don't know our work, Coin Center is the leading nonprofit based in Washington, D.C. that's focused on public policy that deals with cryptocurrencies. So Bitcoin, Ethereum, these sorts of things. When somebody in government, say in Congress or at the SEC, wants to get on the phone and call Bitcoin, there's nobody that they can call who actually represents the network. So we stood up Coin Center back in 2014 to represent the interests of users, of developers, and to defend the freedom to innovate using these great technologies.
Thanks a lot. And Christopher?
Hi, I'm Christopher Calicott. I'm Managing Director of Trammell Venture Partners, which is a deep tech-focused venture capital firm based here in Austin that was born out of a family office from early involvement in Bitcoin specifically. And now we're back to first principles and focused on sound money and Bitcoin with investments purely around the Bitcoin protocol stack. Also, I should mention I was involved with House Bill 4474 and the research that led up to what's affectionately referred to as the Bitcoin bill here in Texas this year.
Thanks a lot. And due to a family and personal matter, unfortunately, the Commissioner Charles Cooper of Texas DOB cannot be here. So that is not who I'm about to introduce, but I want to introduce you to James Slazas, who's going to be on this panel and joining us as well for his perspectives. James?
Hi there, James Slazas. I'm the CEO of VaultLink, which is basically a way for banks to enable their customers to provide cryptocurrencies, by treating those currencies with the same way as a dollar. And in addition to that, I'm the founding partner of Dharma Capital. We're a $1.5 billion investment fund that's registered with the CFTC.
Great, thanks. And then I've been thinking about doing this like all morning of saying Nick, introduce yourself next. But we have two luminaries. Let me start with Nik Carter and then Nik Bhatia.
Hi, I'm Nic Carter, General Partner at Castle Island Ventures. We're an early stage venture firm. We invest in public blockchain startups based in Boston.
How you doing? I'm Nik Bhatia, author of Layered Money, and I currently write a research publication called The Bitcoin Layer. I'm also an adjunct professor at USC Marshall School of Business, teaching fixed income, the traditional finance world where I come from.
Great. Nice to meet you all. And it's quite overwhelming, the intellectual firepower on this panel. I do want to start by kind of giving an overview of the digital asset space. And Peter, if we could start with you, could you give us a little bit of your perspective about what you've been seeing? There's been a lot in the news with the infrastructure bill, but primarily the main issues affecting the US on the national level. I know that Coin Center's been at this just for quite a while. So.
Yeah, so, I mean, to paint with broad strokes, I think you're hitting an inflection point, which will be very interesting. Coin Center's been doing this work for 7 years now. When we first started out, you'd be lucky to find someone in Congress who had any idea what Bitcoin was, or even had heard of Bitcoin. Now that's changed fundamentally, and Bitcoin's being used, for example, in the infrastructure bill as a political hot potato, a way to raise money for the infrastructure bill, a pay for. And this is why we ended up in a position where some rather important policy like who needs to report on users of their services, who is a broker, who actually needs to essentially surveil their customers about Bitcoin transactions, ended up being debated in the context of a spending bill, in the context of the infrastructure bill, and really hardly debated at all, as Senator Cruz said earlier, because it was just considered a way to pay for more bridges. And so I think what we've hit now is a point where, everybody knows about this stuff. Half the people don't like it, and that this is a political football. And so that's unfortunate. Our biggest issues, I think, are tax and financial surveillance. And they kind of go hand in hand because the IRS wants to know more about your transactions, and FinCEN works closely with the IRS for investigations and things with respect to anti-money laundering. And so to really put a point on it, the two big things we see coming up are the infrastructure bill, whether it passes or not, and if it passes, we'll have to address the bad definition of broker in there, the self-reporting regime, which would mean if anybody paid you more than $10,000 in Bitcoin or other cryptocurrency in a trade or business transaction, you would have to report on that person paying you, which in my opinion violates the Fourth Amendment right to privacy because it's warrantless surveillance. And then from the international standpoint, we're seeing the Financial Action Task Force, which is a body of anti-money laundering regulators around the world who kind of come up with homogenized anti-money laundering policies for member nations, of which America is a member nation. All major nations are member nations, trying to figure out how to regulate Bitcoin for anti-money laundering purposes, and doing it in a rather insensitive way, quite frankly, at the moment. We've had pretty good policy in the US from anti-money laundering regulators since 2013 when FinCEN came up with its guidance. But the international scene through FATF is now trying to stretch that and apply anti-money laundering obligations to more people, even people who aren't businesses, even people who have no right really to ask for other people's identification and report that to the government without a warrant. So those are our two big priorities, is tax and anti-money laundering.
Thanks, Peter. Christopher, I know everything is bigger in Texas, and come and take it. And what have you seen from your perspective that Texas is doing? I know you've done an incredible amount of work. And what's your perspectives as you hear about sort of the national policies for digital assets?
So I should probably also add I'm a native Texan. So there have been a couple of mentions earlier today about the Texan ethos and what that means. I would definitely echo the sentiment that was said, that the sort of the Bitcoin ethos and the great Venn diagram of life, the Bitcoin ethos, the Texan ethos, it's kind of a circle. So there's a lot of focus here, and one of the reasons why we decided to do some work that frankly was a little bit ahead of what the Uniform Law Commission and their timetable was, because we felt like Texas has a huge opportunity here. We have an opportunity to lead and send some signal to the rest of the world that Texas is open for business. So we decided to take, as most Texans would do, take a very pragmatic approach to a very clear present business problem, which happens to do with a large investment having a shyness around edge cases that would happen where Bitcoin is used in the base collateral in security arrangements, in credit markets. And of course, any archetype asset class that emerges won't exist in a vacuum. There'll be all sorts of derivatives, credit, usually many multiples larger than the base asset market cap itself. And so we decided that if we took a surgical approach, we want to do no harm. And there's actually a little bit of an Easter egg in what we did. If you know anything about the Uniform Commercial Code, it's by article. There is no Article 12 in the normal Uniform Commercial Code. So we didn't want to imply that we were overriding law that would impact areas that hadn't been contemplated, but we wanted to be very specific and address these security arrangements. And there's actually an Easter egg there. We thought, well, if we're going to choose another number, we should probably choose Article 21. It turns out that was a namespace collision, so we had to go 12, but it's meant to be read from right to left. So,
Great, thanks. Nic Carter, what's your perspectives on the international space? There's a lot of people talking about Texas right now.
Well, there's a huge amount of heterogeneity, obviously globally. At our firm, we invest globally because we recognize that there's an opportunity to support Bitcoin entrepreneurs everywhere. So we're active in Africa and Indonesia and South America as well, in addition to the US. The thing that is encouraging is that not everyone is following the authoritarian tack with regards to Bitcoin regulation. And we are seeing sort of sanctuaries emerge internationally And we're beginning to see nation states following the Salvadorian template. So I don't know how likely this Brazilian bill is to pass, but it appears possible that Brazil and Ukraine kind of follow the Salvadoran approach here in terms of legal tender. Hopefully they don't implement a forced tender regime the way the Bukele administration is thinking of doing.
Nik Bhatia, I'd love your perspectives a little bit on what you've seen like the Texas comptroller do here in terms of what Bitcoin is. And I think you have a very nice book, Layered Money, but I think it goes into a good sort of paradigm of what we're seeing as we start to see the evolution of stablecoins and CBDCs and how nation states are grasping with the idea, including the US, of like a FedCoin.
Listen, if we are to promote this idea that Bitcoin should be allowed in the United States because we have the freedom to choose what currency we want to use, it's also the right for a bank, let's say JP Morgan, to issue something called JPM coin. It's a stable coin. It is a way to issue a different type of banking liability for that bank. The deposits that you have with JP Morgan or Wells Fargo are liabilities of the bank, and a JPM coin or a Wells Fargo coin would also be liabilities of the bank. So I think that it is their right to innovate in that way, and we are seeing that already. We will see stablecoins continue to be released by banks and other private entities that are non-banks. Now we will see the United States try to regulate stablecoins as banking instruments, because in reality they are. If you just strip it down to banking liability, a stablecoin is that. And so I believe that regulation will come. But the Fed itself only has two types of liabilities. They have notes, which are the paper money you have in your pocket, and they have reserves, which are the banking system's assets that they use to leverage. Well, if the Fed replaces the wholesale reserves with a Fed coin, I think it'll make the financial system work better. Right now, a lot of wire transfers are still done with fax machines. So it is an archaic way of transferring money. So I think a Fed coin will help there. And then the main concern is that you won't have cash anymore. You're going to have these digital Fed coins in a wallet, and the Fed will be able to see everything that you're doing. Now, I don't love that idea, but I do believe that it's coming. So instead of saying the Fed should not do a Fed coin, rather, let's try to have a Fed coin that puts privacy forward from the American citizen's perspective as much as we can, as well as be a leader in technology and show that we can modernize our financial system. The ECB is about to launch their digital euro beta project, and we see concerning things out of the European Central Bank, for example. The ECB has said that they don't want to jeopardize their banking industry by having you take your money out of Deutsche Bank or BNP Paribas and put it in digital euros. And so they're going to have essentially a negative interest rate or a penalty if you hold digital euros above a certain amount in order to protect their banks. So there's a lot of stuff going on in the CBDC world. And as Americans, I think that we should understand a Fed coin is coming. It's what we want from it, and we should be reaching out to our representatives to communicate that to them.
One of the things that Fed Chair Jerome Powell has mentioned lately is the idea that we need to make sure we get something like the CBDC right, not necessarily be first. Christopher and Peter, what would you say goes in, particularly from the Texas side and the privacy rights side, of what needs to be done right before we get issued a Fed coin or CBDC? And Peter, maybe explain a little bit of what you see in the laws, both in the US and Texas, about why privacy is so important in this space.
Well, oh, sure.
I would just add, and then maybe you can tie some of what I have to say, and just to take a minute. In true Texas fashion, I'm not prepared to go quietly into that night. I think there are very deep, transformational, in a very dark way, elements with CBDCs. And I'll tell you why by an example. If you can think back just less than 2 years ago to before COVID, and if you watched any of the videos that were happening in Hong Kong with protests, around the world there is a strong undercurrent that is weaponizing money itself against citizens and quashing dissent. How that works. Now, I'm a technologist. I love technology. I invest in technology companies, but most technologies, unless it's something like Bitcoin that's designed to be inherently pro-freedom, pro-liberty, they're amoral, really. There's just the application that can be co-opted. One of the things that happened, a lot of things happened in Hong Kong during those protests, but real-time facial recognition, where you're monitoring people on the street, and something called the octopus card, which is a top-up based transaction, due to fairly common these days data analytics algorithms, they can track movements of people that are actually leading dissent or riling up protests. I can tell you, and this is my personal view, I think it's shared with a lot of people in the audience, that this trend toward day-to-day, always, everywhere, everything financial surveillance, coupled with that real-time facial recognition and surveillance, that is a very dark, dystopian hellscape, frankly, that I don't think anyone really wants to live in. And if I'm sounding like I'm sounding the alarm right now, it's because I don't think that generally people are aware of how insidious these technologies could be if they're actually mandated from upon high. One of the things, thank you. Someone said earlier today, Natalie mentioned that there is a moment, we can all feel it, there are things that are changing, there are different conflicting ideas about really it's the ultimate question, who are we going to be as a free society? I think that it's important that we understand some of the implications, and the IRS question, it plays right into this, because and by the way, it's not a matter of banks reporting. If this is done in real time at massive scale, it'll be every transaction, everything you do anywhere. I'm thinking, I'm down in Texas. If I decided to go buy a really nice pair of dress boots, someone in an office outside of DC feels like they need to know about that for some reason. If you buy the kids a PlayStation for Christmas, they need to know about it. This is not the direction of anything that I ever understood that I was born into when I grew up down on the Texas Gulf Coast. And it's not the future that I want. And I think that the only way to avoid that future is to speak very clearly and say what we don't want to be, and just question, is that a reality I want to live in? And so I am, as you can tell, not a big fan of CBDCs.
And it's alarming because this trend has been happening for a long time. It's much older than CBDCs, it's much older than Bitcoin even. We can track the erosion of our financial privacy rights all the way back to the 1970s, when people started making bank transmissions. Basically, you used to buy everything, probably using cash. You'd occasionally go to your banker, maybe for a mortgage or something big. And other than that, your cash transactions were private. If anyone had records about them, it was you and the person you were paying. And those are private records, which means government can't come and search for those records without a warrant from a judge who's hopefully an impartial observer. So we don't get abuse of this ability to search and seize our private papers from investigators who will be prone to abusing those privileges because they want to catch criminals. So we have this Fourth Amendment right in this country. It's something that separates us apart from really any other country in the world. Our Fourth Amendment rights and our First Amendment rights are really unique as Americans, and they're worth protecting. And they're worth saying, this is what I want to be. This is what I want this country to be about. It's what our founders said it was about, and it's also what it still should be about today. And so how does the Fourth Amendment apply to bank transfers? Well, back in the 1970s, in a series of cases, the third-party doctrine was established, which basically said, you don't have a reasonable expectation of privacy when you hand your private papers and your private information over to a third party. The case that actually first tested this theory was about handing your information over to banks. And the Supreme Court back then created this loophole in the otherwise very important warrant requirement for searches and seizures and said, well, we can go to banks and get customer information without a warrant because you handed it over voluntarily to a third party and they held it for a business purpose. Fast forward to the 90s and the 2000s, everyone is doing all of their transactions through banks. So whereas back then it would have been a couple of large transactions that would have been fully surveilled without any warrant requirement, now it's every transaction you do. So it didn't need to be central bank digital currencies to create this erosion of privacy. It just needed to be electronic transactions. And that's why I became passionate about Bitcoin and why I became passionate about Bitcoin public policy. This is the first technology to come around in a long time that doesn't empower these third parties upon whom there is no warrant requirement to seek personal information about their customers. It's a technology that actually empowers the end users, peer-to-peer transactions. And in that context, and we'll need to fight this all the way up to the Supreme Court, if I'm really just paying Nick person to person using the Bitcoin network or the Lightning network, and we both hold our own keys, There's no search there that can happen without a warrant because there is no third party. Third party doctrine doesn't apply. Fourth Amendment rights are still in play. And that will be a huge change to the way we've done financial transactions for the last 30 years. And I think an American change, a good change.
Great. James, I want to go to you now because I know you're really interested in Texas from the banking perspective. And again, we couldn't have the commissioner here, but obviously the banking commissioner has allowed the custody of cryptocurrencies in Texas banks. And as a former ex-regulator, I think that's fascinating too, because you also have super parity in Texas, meaning a Texas bank can pretty much do what any of the other 49 states can do and the US. And James, I think we also have this complex problem because there are issues relating to like ransomware and challenges that sometimes banks do have to step in and help with. And I know that you have a really interesting view of Texas and how cryptocurrencies could be integrated into the banking system. How do you see that friction? What would you explain? And what's been your interest in Texas?
Well, and actually along the lines of what everyone's been saying, we actually enabled the other side of it. So I guess that's why I replaced Cooper on this. So we've worked with the State Department, El Salvador's central bank, and the finance minister on if you put this in the banking system, we already have our rules and regulations. And so the banks are forced themselves to abide by certain ways of how do they handle money. And so now if you put a new asset in, so now Texas has been great to say they want to give their financial institutions clarity on, yes, you can custody this. If it comes into the bank, it has to go by the exact same type of rules that they treat money. So if it's $1 and they have to go by their money transmission regulations. So the privacy conversation, I think, is important from a cultural standpoint and societally. When we go to the banks, then the banks are forced, and their hands are forced to say, I have to treat it this way. And that's essentially the framework that we work from, is to say, we validate the assets. So similar to a suitcase of cash coming into a bank, we make sure that these assets get verified first from a source of funds. And then every movement, which I know doesn't sound so great, every movement that does occur from one customer to another, again, gets validated through an MSB type of protocol. I had mentioned I manage a large crypto fund. Unfortunately, we haven't been able to participate in any of the DeFi side of things, any of the decentralized exchange side, because if we can't basically AML our counterparty, it's impossible for us to abide by our regulations. So there is call it a bifurcation in the conversation, in just that there is this one, the blockchain landscape should be able to say, here's a lot of technical innovation, here's a lot of movement, but then you have certain entities that have to be regulated. And so the reason like Texas is essentially the commissioners are all very interested in this asset. They want, as we were saying, to make the Texas the universe for blockchain. And so I think being able to educate them, to get them a little bit more over to a more decentralized world is a great opportunity. I think if we just start with, we have to throw out all the different parts of the regulations or the tracking, they're going to be writing their own books. They go, no, we have to do it this way. So I do think that it becomes, as everybody always says, it's an education, and it's a working also with the system to say, here is what this technology can afford versus just, they call it the fear.
Absolutely. And Nic Carter, what's your perspectives on this? Obviously, privacy is really challenging. So, we also have the traditional banking system. What's your prognosis on sort of how this will balance itself out regarding the issue of privacy and the way the industry works today?
Well, I think it's an extremely critical time, and we're seeing more and more provocation and more erosion of transactional privacy in this country to the point where it virtually doesn't exist. And I think Peter's history of the matter from the 70s to today, as the world got more digitized and banks grew more important, and then ultimately as the government made it more difficult to get a bank charter and began to exercise policy through the banks, in a shadow way. If you look at the Obama era, Operation Choke Point was a means of covertly insinuating policy into existence through the bank sector. Something is deeply wrong with the way finance works in this country in terms of transactional freedom and transactional autonomy. And effectively, our right to transact privately online with cash-like instruments doesn't exist today. Cash implies finality, it implies autonomy and privacy, and unfortunately, I don't see a digital equivalent, and I don't believe CBDC will be cash-like. I believe it will carry further disclosure requirements. I've never seen a central banker describe a CBDC that would be truly, autonomous and give you genuine transactional privacy. I think Bitcoin is our best chance at that. I also think that stablecoins might offer us an interesting opportunity there, and it's not surprising that Jerome Powell and central bankers are trying to regulate stablecoins out of existence or bring them under the aegis of the bank sector. So if we don't stick up for these things, we just will not have transactional privacy, and ultimately all of our data will be collected into the enormous surveillance dragnet, and the financial system will be weaponized against us, as has already been happening in the last decade.
Thank you. We're going to finish up our panel with a question. I want to start with you, Nik Bhatia, and we'll go right down the line here of my challenge, which is what are 3 things that Texas could do from a regulatory perspective to help continue this trend of Texas being the Bitcoin capital of the world, the blockchain capital of the world? What would you prescribe? And I'll give you one just for me, which is just hearing what Nic Carter said, which is, I'm a former ex-regulator, and I learned a lot. I worked under Sheila Bair during the financial crisis, and I've seen a trend of regulators leaning a little too much in. And a regulator should be a public servant like anything else. So I would just say with the SEC and other large organizations, it's important to just remember that your role is to help with the investors, the capital formation, and we never want to see too active of a role that would actually quelch innovation, and that's been my concern. So as long as Texas can do that, I think you'll continue to attract innovation. Nick?
I'll give you 2, Jack. So one of them I think that Texas can do is, we talked about how now the Department of Banking allows custody of virtual currency. That's great, but a bigger challenge is, what about all the Bitcoin businesses that do business in dollars, payroll and expenses? Those companies should be banked by Texas banks. And there shouldn't be any hesitation to bank a company just because they have some remote association with this new technology. It doesn't make any sense. So we have to see banks lead in that way. And the other is on taxes. I think that we have the IRS has their own tax code, and each state has their own tax laws. And so I want to see Texas take this idea that we need to pay capital gains for de minimis Bitcoin transactions. We need to take that out, start at the state level, and influence the other 49 states and the federal government to pursue that.
Thank you.
I'll be brief and I'll give you 2 as well. Special purpose depository institution regulation in Wyoming, consider that. 2, listen to Ted Cruz on Bitcoin mining and energy grid interaction. He's absolutely right.
I'll be quick too. So Texas is one of the first states to come out and be very clear that their money transmission licensing laws don't apply to people like miners, software developers, even Lightning Network nodes, at least in the way they interpreted it. They mentioned Lightning nodes at the time. Making sure that those people who build the backbone of these public infrastructures, the Bitcoin network as a core technology, are never obligated to get licensed is the biggest, most important step that any state can take, and Texas was one of the first to take it. Now, what can they do in the future? I think they should create a full-on legal protection for that class of people. If you don't hold other people's Bitcoin, you cannot be subject to any kind of permission-based regulation. We've got a bill in Congress, in the federal Congress, that Representative Tom Emmer came up with that would do this on the federal level, but Texas could do this on the state level, at least with respect to state law, and send a really good signal to the feds. Sadly, so much of this is about the federal government, so the more that Texas can send people who like Bitcoin and like open blockchain networks to Congress, the better things are going to get for me in Washington, D.C.
I would just say, obviously it's more clarity. really any of the different parts as you look at innovation, you want to be able to say, where am I getting into? I think from we look at virtual assets, we also have digital security. So different things where you might tokenize real estate or different kinds of investment funds, and being able to have that asset so that you know if that token has been moved to another counterparty, that it basically becomes collateral. And having that kind of clarity enables a lot of different types of financial products, different type of repo products, things of that nature that would really, I think, help foster not just the blockchain side of the world, but also just use the technology within our traditional markets.
I'll go very quick as best I can. And by the way, I'm also the chair of the Financial Services Committee for the Texas Blockchain Council that's sponsoring this event. So I have my short list of action items, and I'm going to give them for you as a conversation starter for the rest of the day. First, the idea that self-custody is somehow something that would be regulated away, I think is an affront to natural law and the ability for me to have property rights. Texas is a place where property rights really do matter. We've got to address that, and then hopefully other states will follow suit. We should have a state as a sovereign, Texas, the 9th largest economy on earth, that's aligned with people creating businesses and jobs and the citizens of Texas. We need to have Bitcoin in the Texas Treasury. We need to also have de minimis Bitcoin payments, non-taxable. Some people have mentioned these things before. Critically, to your point, if me and my buddy Ryan Gentry that spoke just a little earlier today open up a lightning channel between his computer and mine, we are most definitely not suddenly in the money services business, and we need to have clarity on that. And then lastly, Texas just needs to really play to its strengths, which really speaks to proof of work mining and all the energy infrastructure we have.
All right, thank you all very much. Let's give a hand for our panel.